Welcome to Java. Thank you kindly for joining me. It's June 6, 2025. It is also Friday. I am on mobile and this is actually also through Starlink connection. I'm on the run, so I'm hoping sound and everything is okay with this. I wanted to get one out yesterday, just absolutely couldn't. I was at the Biltmore State in North Carolina. I was checking out Asheville to see the latest on what's going on with the construction there, as well as the recovery. Now, there's several businesses still closed. It looks like they've done a large amount there, so it's coming along quite nicely. But for now, there's a lot to go over this morning, a lot of coverage that is going on, and a lot of kind of distraction, if you would. So let's get started. What's going on in the markets? Beer grade meters at 58 now. A lot more retail are jumping in on this weak upside that has very low volume. That is not a good thing in general. We've got weak markets, and as I said yesterday, well, the day prior to yesterday, we've got some cracks coming in here. Yesterday kind of chopped around a bit level. We did have the JOLTS data was fine. Then ADP came out showing jobs are weak. I'll talk about those more in a moment, but we're seeing reality begin to set in. Now, we had this headline, which is a bit of propaganda here, saying that they have a deal, Trump says, after trade talks with China's Xi. Now, this is exactly as the headline is written, and it's made to make you think that there is a deal with China going on, when indeed what they're relating to is that Trump had a phone call with Xi, and what the deal is actually with Germany. Now, that's no small thing either, as Germany is one of the, basically, the largest portion of the economy that is underpinning the EU. Now, let's look at the rest of the market dynamics as they stand at this moment. We've got the 10-year yield dropping a bit. That means it's a little bit of a run to the safe haven as it's going into bonds, bringing that yield down. We've got relative strength of the dollar gaining slightly. This is after more loss yesterday. So the net effect, it's still weaker, and the dollar is going to continue to get weaker. This is going to create more inflation. It's a different term for the dollar getting weak, is saying it's inflation, and prices rising. Now, with this, we could see stock market come up a bit. Now, at the moment, they're looking a bit in the red. We've got the volatility index is down, gold back up. So this is safe haven trade in short. But we are watching the futures saying that there's a bit of green coming in. And as I said, that might be that kind of weak reverse trade. But also, what's underlying this now is weak jobs data is giving the illusion to the market that the Fed, and indeed they will, probably around September, cut rates. Easy money. So market loves easy money, even though jobs are crushing out the economy, not paying attention to the economy right now, just want free money. Cryptocurrencies back up slightly, but still showing a lot of weakness. If it comes down below that 101 level, I'm going to be looking at that as a buying opportunity on sale, depending on the levels that come in for the longer term. You can do whatever you would like. Do your own diligence would be one I suggest. Now we've got Friday. Prior to the market open this morning, we are getting the employment report and hourly wages. Now, I expect that some of these reports will be manipulated, but they saw what happened with the reports coming out yesterday, and they've got Fed presidents coming out to speak about this later, and none other than Michelle Bowman, who is going to be having a higher end role in the Fed coming forward here. Now, I put this up as a reminder. What this all boils down to for the real economy is energy. And with this, we've got the EU talking about not using Russia's gas, which is absolutely ridiculous, at least for these next couple of seasons, because they don't have an alternate method that is viable yet. Now, why do I say this? When it comes to power, there are different time periods that it takes to get this power up and running. And if you notice, like solar is pretty much immediately, battery also, but they both require rare earth minerals in order to make these. We've got gas. Now, United States opened back up coal reserves for utilization. I don't believe the EU has yet, but that is the second largest and least expensive form of energy. It would be wise if they would, at least for a brief period of time. The longest to get it to running is, as you'll notice, nuclear in order to, um, even if it's refurbish a power plant, they would have to do something that takes a good amount of time in order to get that online. However, it is probably the most viable for the foreseeable future, given what's going on here. So all of this comes down to energy, and they're going to have to open up the nuclear sooner or later, and that is major contention. AI is going to gobble energy like you wouldn't believe. There is not enough right now, despite what they're saying, despite oil being down, could be a purchasing opportunity. Now, with this, I want to go over some things with the real economy. They've been covering this up for a long time. Now, the latest that I've seen that we're hearing is about this spat between Musk and Trump. So they're throwing drama in here because they know that the masses will bite off on this as some kind of real news. And there's nothing in there. There is nothing in there unless perhaps you're trading Tesla. Now, let's see what's really going on. United States layoffs spiked nearly 50% as Doge-driven cuts take center stage. Now, again, this is propaganda, so turn on your propaganda blindness. What they're doing here, US layoffs spiked nearly 50%. That's true. Now, they're kind of insinuating that it's Doge-driven cuts. Well, Doge-driven cuts were mostly federal, and these are not the layoffs that we're seeing. We're seeing private sector. So they are frosting over this in order to make you want to eat this piece of garbage that they're putting out here. Now, under the numbers, 93,816 job cuts announced by employers. Now, these private employers, this is not the government, which is going to be on top of this. So reality, real economy, Procter and Gamble slashing 7,000 jobs. I put the number in here for you. It's about 15% as consumers pull back among economic uncertainty. Nothing about Doge. It's a load of garbage. Okay. P&G said that it would look at raising prices to pass on the impact of these tariffs onto consumers. Consumers are not going to eat this cost. They cannot. They're backed against a wall and the economy is suffering. They realize this and now they're cutting jobs, which is going to cause that spiral. Because as people lose their jobs, they're not going to be spending money. And in fact, then they're going to be defaulting on their loans, their credit cards, their automobiles, and then their real estate. Let's go on. American fruit giant Chiquita to lay off every worker in Panama in a brutal banana industry collapse. Now, this is 1,600 people, and you can say, well, yes, this is in Panama, and that is true. However, we are now in a seriously global economy, and these job cuts will trickle back, and we're going to see the effect of this. And the point I want to make with this is that it is global. Now, we've got Hooters is a restaurant in the United States, large chain, closing over 30 restaurants suddenly, saying that it's a difficult decision for the company. Now, there's a little bit more to this. They have split off and have decided to leave the restaurants that will remain open are under a franchisee type of structure. So all of the restaurants that they actually own, they're closing, and the only ones staying open are the ones that are franchises, which means independent business people purchase the name and run them. So very difficult decision, very difficult times. With this, we've got major US Jim Gold's has been around for a very long time. Their chain declared bankruptcy, citing irredeemable struggles. Now they're also battling a new online type of fitness. But this is showing more layoffs because as they close, the employees will not be kept on. They're going to be fired. This all trickles down. Lululemon clothing manufacturers saying their shares tumbled 23%. Well, of course, they're cutting their full earnings guidance, saying that it is a dynamic macro environment. Now, they don't want to say what it's boiling down to, could be the Trump that trades, but this is the economy slowing down that we've been talking about. Light volumes, more supply chain disruptions. Okay, we've got North America's oldest company closing after 355 years. Now, this is a Canadian company called the Hudson's Bay Company, or also known as the Bay. But again, global, 355 years. Now, they were not hit by Doge, so you can't say that that is the reason for that one. So I just want to move forward with this. We've got housing market cracking as prices fall and inventory surges nationwide. Now, it's not exactly nationwide. There are some markets that are actually still on an increase. We're watching major migration. There's still people that have to sell and repurchase homes, but we are watching the demographic shift away from the expensive areas. In particular, where there's major job hits, they're shifting out. Now we've got housing prices beginning to drop in March in major metropolitan areas. So the rural areas still doing very well for the most part, very locale driven. A couple of other things that I want to bring up before I let it go. The first is mainly where this is all headed. Now, we've been speaking about the unemployment and how that was going to increase rapidly. I still believe there's more to go. They're saying it's for roughly 4.4%. I think their reported numbers are going to hit more of 7%. The realistic numbers and shadow stats are saying more that currently it's more like 9%, and that it's going to double from there is the estimates. Now, what is this all heading towards? Venues have control. Please stick with me. I know we spoke about this in Discord. I lose some people because I think it's a bit more shadowy and a little bit more of conspiracy theory. But if you follow this through with what's going to happen with the unemployment and then the loan defaults, this is all about control. So why do I say this? We're watching more controlled movement, more communication blackout, hitting a second airport. Now, this is Denver. So they're closing first Newark, now Denver. Now, what's going on with this? This has been in place for decades. And yes, it needs an upgrade, very definitely. But now they've got these closures that I started warning about almost 2 years ago now. When I first started this, it was one of the first things that was becoming imminent and that they were showing, and it was all kind of centered around the FAA. Now, I hope this video doesn't get flagged for this again, but this is what's going on. Now, we've got major airlines sending a warning about the legislation. What has happened here is they are tying in credit card rates, fees, and charges in with the Genius stablecoin bill. And with this, they're going to control a lot of things. So they're putting a plea in because their argument is that these fees are so massive that it's going to cause major cuts to their corporations. And that should make you think. These fees are so large that it is controlling this. So there's a little bit more behind that as well, but I want to move on. We got more than 4 billion user records exposed in the largest data leak ever. Now, this is heading towards a digital ID so that they can control your identity, verify everybody, keep your data from being hacked. It's for the greater good is how this will be sold. And I just want to warn you about this now because I think overall it is a massive issue. So with this, I wish you all a wonderful weekend. It is Friday. I don't know that I'll be able to get one out Monday, but I wish you all a wonderful weekend, and until I do see you again. Please, my friends, resist.